Good morning to all of you. Can you hear me loud and clear? If yes, give me a thumbs up. All right. All right. If not, then give me the L and C. All right. Loud and clear. All right. Okay. You can see from my dressing itself, I'm going for a meeting later on. So that's why today's MAO is going to be a shorter one. Again, I need to leave here by 12:30 latest. So for today, it's going to be very special because it's a big thing for us. So hopefully things goes well. But more important thing is this, okay? Okay, more important thing is this, all right? Today's MAO is although short, but it's going to be very, very important because there's a number that you must take note tonight for S&P 500 spot market. I'll tell you the number. It's going to be very, very important, okay? So without further ado, let's begin our this morning MAO right now. Here we go. Okay, once again, good morning to you, Alex. Morning to you, Louis. Morning to you, right, guys? Good morning to all of you. Okay, now today's the 8th of June, Wednesday. Okay, now today you can see on my background we have Nancy Pelosi. All right, that is the new stock market queen. Now last year it was Katie Wood. This year, I think it's Nancy Pelosi. All right, okay, because since last year, the previous year was Katie Wood. Last year was Nancy Pelosi, and it's now the new king is actually her husband. Okay, Paul Pelosi. Okay, I'll come to that later. So anyway, the thing is this. Okay, you can see from my caption today. Let's copy or go against Nancy Pelosi husband's homework. Okay, so in short itself, right? What I'm trying to tell you this is that okay. If you think that whatever I share later on makes a lot of sense, okay, example, then you should copy whatever he bought, okay? Now, if you think that, nope, doesn't make sense, something's wrong here itself, the equation doesn't make sense here, then you go against it, okay? So it's a final decision on your side, okay? I will not really tell you what to do. You just look at the chart, you compare what I will say, and then you make your final decision, yeah? Okay, that's the whole point of this. Morning to you, Michael, Janet, Peter. All right, morning to you. Then, of course, the main thing is that one counter that we'll be focusing on today will be Apple, because Apple really has a very big influence on the S&P 500. And I repeat, right, S&P 500 will be my first, this very important point today. Then, of course, we have this guy, the one and only this guy, Marco, comes in and says that, right, it's time to look for buy. Now, he had been calling for buy since 2021, okay? And almost every other time itself, when he called for buy, right, the market usually go down. Okay, so not too sure whether this time will be right. So I'll talk about him later. And of course, main driver is still the inflation data, and we'll cover that also. And all eyes will be on this coming Friday CPI data. All right. So with that, let's us begin. Now, disclaimer apply as usual, my friends. My job is to make you guys what they call richer if you can actually follow whatever I share. Okay. Now, end of the day, you have to do your own risk assessment. Yeah, it's very, very important. Okay, disclaimer apply as usual. All right, make your own risk management before you enter the market. All right. Okay, so of course in Wall Street, right? Wall Street, there's no such thing as sure things. All right, I mean only death is a sure thing. So what happened is this, but then again, recently, last 3 years especially, there's a sure thing in the stock market, last 3 years, okay? And that sure thing is actually Nancy Pelosi's husband. Okay, all right. So you can see that, right? I got a sure thing stock idea. A sure thing? How do you know? Nancy Pelosi husband, that's a joke here. Now, really, because the last 3 years, right, this couple has made so much money from the market. All right, in case you don't know who they are, okay, let me show you some of the key Google search on them. Now, Nancy Pelosi husband made 5.3 million on timely bet. All right, the keyword is that you make money from stock market is pretty normal, but timely, how timely is it? It's almost immediate, right? Almost immediate, and he does a lot of options, yeah. And the best part is all out of the market, very far away, and oh my God, spot on, okay? So recently, right, okay, Nancy Pelosi husband last year bought 4,000 shares of Alphabet on June 18, okay? Okay, in a financial disclosure signed by Nancy Pelosi. Now, to understand this, yeah, Nancy Pelosi is as part of Senate, right? So she don't get involved in the stock market. She says she don't get involved. So the one that traded for her is her husband, okay? So that's a point now, but think about it, okay? Think about it, okay? Anyway, so what happened? Immediately after that itself, right? Wow, she makes some money. Now the thing is this, back then, right, there was a big of problem there in house because of the this anti-graft thingy on technology company. But after that, when it basically was not when the act was not implemented, so obviously all the technology shares went up. So because of that, right, immediately it's all right. He made quite a bit of money. All right. In case you're going to know who they are, this is how they look like. Okay, Nancy Pelosi and Nancy Pelosi's husband Paul. Okay. All right. Yeah. Good idea. Okay. So what's the point here now? Okay, I'll tell you more later on. Okay, later I'll tell you more about them. You must pay attention because it's going to lead to Apple and stuff like that. Okay, very important stuff. Okay, one of the better forward indicator, undeniable. So you can see that right now, right? Okay, she herself, right, also paid some options recently back in 2021, and she makes about 1.4 million. So think about this as well, right? Is it insider trading? Well, I leave it to you to decide because anyway, it's not deemed as insider trading because US has a very incredible way of doing this. Okay, they say that they can invest. Okay, they can invest, and there's nothing wrong. Okay, all right. So I leave it there. But the point is this. Okay, recently this Nancy Pelosi husband bought some shares. So maybe it's a good idea that you don't follow and make some money out of it. Okay, I'll get back to you later. Okay. Now, what is more important now is a fear and greed index now. We are hit 33. Hey, not bad, right? We were at 6 at one stage, and now it's 33. So you can imagine now you understand why itself is so easy to trade the market. As long as you see it goes down to a very good level, people will need to buy. And when it hit a certain high level where everybody's chasing it, you just take a sell position. It's as simple as that. So now the thing is this, it's still at 33, though it's a fear factor area, but I must understand. From 6 to 33, I mean, it went up by a lot, you know that, in a way, in percentage form itself is 5 times, okay? All right, so this is updated on the 7th of June, yeah? That's yesterday, this morning, in fact. All right, now what is critical that I want to share with you today is this. Now, I told you, right, the number that I'm watching now is about 30 to 33 because that is the range whereby the last few times the market actually creates a resistance, okay? So we have it here back in July 2021. Then after that, we have it a few here itself about nearly October period last year. And then we have some during this year around this March period. And now we are here. Okay, good idea now. Okay, so my point is this. I believe that we are near a potential resistance at this time right now. Potential, yeah? So of course, if the market crosses the resistance, the price will go higher. But if the market couldn't go past this resistance, it will go lower. Okay, simple as that. Pretty simple, yeah. So of course, if the fear and greed index continue to go higher, that means that the stock market is doing well. Okay. Now, if the fear and greed index goes down, then of course there will be some selling. This one is quite simple, yeah. So this one no need to be an expert to know this. It's just a very simple abbreviation of what can happen. Okay, of the market. Okay. All right. So with that, okay, clear my screen. Okay. All right, so now the thing is this, going to go straight to the point. Oops, sorry, my bad. Now, do understand this today, we have the US crude inventories, all right? And we do expect the supply to be lesser, okay? As is it. Now, the thing is that people have been asking the same question over and over again, Cal, what do you think about the crude oil market? Now, I've been very, very vocal on this. So before that, I missed out one little thing to share with you, just to verify my point. You can see this is from Fortune. Yeah, from Fortune magazine, okay, and they talk about Nancy Pelosi being spot on during his call in 2021, and he made his money and stuff like that. Okay, let's skip it there. Okay, now let's look at the crude oil first. Okay, crude oil. Now the thing is this, let's do a crude oil. I mean, this chart itself, can you look at it? It's very, very clear. The chart looks very strong. It is definitely getting stronger every single day, in my opinion. So with this itself, I can just say this upfront that it's going to be very difficult for this counter to come down. And it's going to hit my 121 level very, very soon in the spot market. Now, yesterday, the crude oil came down to 116 level. And then about the, okay, come down to about, how much is that for cash market? Sorry. Cash market came down to about 117. And after that, right, what happened? It just bounces back all the way to 119 again in a span of less than 2 hours. So you can see that there was really selling and selling and selling onto the counter, but as fast as it can sell down, the rebound is twice the speed. So what I'm trying to say is this: someone is definitely accumulating a lot of crude. And we all know that White House, the OPEC are selling. But again, I repeat, right? The world needs about 2.2 to 2.3 trillion, 2.2 to 2.3 billion million barrels of oil every day for world supply needed. Okay, the demand is there. So when White House came in 1 million, and of course this OPEC come out with another 600,000, the number just doesn't match. So it makes a lot of sense, and we are going to get nearer and nearer to the hot season. So that is where you will use a lot of electricity. And then when that happens itself, right, you will need fuel. So that's the thing here. Well, some people ask me this question, Cal, if weather getting hot itself, right, then why will we need more energy? Well, unfortunately, you must understand how it works. Because when getting hot, right, you spend more money and more energy onto an air condition, right, to make sure things get, get you cool and all your food stuff. So you will need to spend more. So on the chart, it's very, very clear that it's just a matter of time you're going to break 121. Okay, I'm pretty confident on this. So we're still pretty long on this market. Okay, got an idea now. All right, so coming back to here. So the thing is this, so today's data is all right. I don't think whatever will help. It will just continue to go higher, in my opinion. Now, tomorrow it will be the initial jobless claim, and the numbers are looking slightly higher than expected. Okay, it means that last time was 200,000. This time now it's 207. Okay, I believe the number will go higher, as we saw in the ADP day pass there last week. Now, of course, the one and only one, and everybody's watching now is very closely, is this CPI data. Okay, so this CPI data, I'll talk about it more later. All right, my main thing is this, there's two views now. One is the retail view and one is a Wall Street view. I'll talk about this very, very shortly. All right, so this is something to share with you that we'll take a look later on. Okay, so let's just look at the US stock market first. Yesterday was pretty clear. Once the market opened, it gapped down initially, then went sideways for a while. It tried to go above opening, yesterday's closing, came back down, but it's about 1 a.m. Singapore time. That was where it started to move and all the way up. And we all know that yesterday for us, the TWB student, it was a doji directional day. So above OP, we just had to buy. And that was so clear, all right? Blatantly clear. Okay, all right. So all this information already shared with you. So I have to skip all this. Oops, sorry, my bad. Forgot to do my PowerPoint properly. Okay, never mind. That's good then. So the Dow Jones gained about 250 points last night as the bond yields falls. Okay, trader shakes off target profit warning. I'll come to this later. Yeah, let's look at the yield first. Okay, now the yield, let's take a look on the yield first. Okay, now the yield, I already tell you it will go to 3%. It really went. Okay, so yesterday the yield went up to about 3.06%, and then it pulled back down to 2.957. But I tell you this is not going to hold. I believe that this is going to go higher again. Okay, I believe that this is going to go higher again, and my target is still the same at 3.2%. Now, why do I say that? Mathematically speaking, it's all right. If we're going to have September, October rate hike, right, we will easily hit about 3%, right? So that's why my belief is 3.2%. Now, once it reaches there itself, maybe we'll take a breather. But at least from now, I don't think so. So yesterday pullback, right, gave the stock market a little bit breather, and they think that maybe not so bad. Yeah, you see the way they play this thing here. But I still think that it's very clear we're going to see a further upside very, very soon. Okay, come back to here. It's all right. We all know that Target, its company, by the way, issued a warning on its current quarter's profit, and it put pressure on the broader retail level. But there's something you must understand. Yesterday, it's all right, when Target, the company, came out, right? Let me show you the chart. Let me show you the chart. It'll be easier for you to understand this. Okay, hold on here. Hey, wait a minute. Okay, so you can see that yesterday the counter, my God, okay, the counter gapped down. Okay, the counter gapped down to 148. It was the closing was 159. Then it opened 148. Okay, then what happened? Wow, look at it, a huge amount of buyers coming in and pump up the price all the way. All right, the total volume traded yesterday was how much that? Was easily, let me see, about, wow, that's a lot. Okay, easily itself, that's a volume number that I can see here. I can't really see it. Where did I can see the number? Can really see the volume? Okay, never mind. Okay, the volume is definitely much higher than the usual, yeah. But more important thing is this, okay? Very important thing is this. This counter itself, right? Yesterday was heavy buying, okay? Very heavy buying. So what causes it to happen, right? Is because, let me take a look, Well, the thing is that the retailer announced plan to work down excess inventories. And of course, that tells you that the company is not doing well. But Wall Street came in and said that, you know what, because you lower down all this, that means your costing will be lowering. So that means your revenue will be better later on. So the market twisted the whole news and go for the buy instead, which is very, very normal. So because of that, all right, the share price recovered. And of course, Walmart also basically went lower. Amazon also came down. So we all know that, right? The current situation now is that the retails are not doing that well, okay? And they're cutting down costs, cutting down manpower and stuff. But Wall Street just twisted the whole thing and said, you know what, it's good. So you see, this is how the stock market plays. They just want to tell you whatever they want. They will just do it and twist it all around. So later on, it's already they, oh, the inventory is not doing well again, and blah, blah, blah. And maybe there's some problem here, and then things will go the other way around. Okay. Anyway, so this is what happened to Target. Open lower, trade higher, despite a bad news. Okay. Now, of course, energy is still definitely the top performing sector. As we can see, oil continue to go higher. ExxonMobil, Chevron, Phillips all went up. Okay, and I told you, right, energy will be the best sector to buy this year. I've been telling you that. Okay, and of course, Apple shares came up 1.7%. There was some upfront, some buying. Okay, but then I'll talk about this shortly. So this is what happened yesterday. Okay, pretty simple, yeah. Okay. Now the thing is this. Okay, I want to talk. Let me just let me just share. I forgot to share. No wonder my friend asking me where's the MAO today. Okay, a minute. Just give me a while. Okay, so the thing is, let's just talk about some local news, overseas news first before we go to the main gist of it. Yeah. Okay. So first of all, right, you can see that Target and Microsoft shares are not doing well recently. It's because of their earnings, that's what they call forecast. So why is happening, right? Because Target is those retailer. So basically, right, shoppers are spending lesser. That's very clear. Because when your inflation is going up the roof, then your earnings is not following through. Definitely, your people, the sales purchases will go down. And of course, as a retailer, right, they will take in the products first to sell it to you, right? So the inventories will be very high in costing. So that is where the problem comes in. If they don't bring in the products to sell, then of course they will have to incur costs. But if the retailer don't have the money to buy, or they find it too expensive to buy, or their earnings not there, then of course there will be another problem. So this is the bit of this chicken egg issue. All right. Then of course we have Microsoft. We already seen what happened to Microsoft. Okay, recently regarding about their sales target too. It's not there. Let's just skip it. Then of course, but then the main thing is Deutsche Bank came in and said that, right, these tech stocks could be the pots in the storm during this bear market. So saying some of them may be good. Okay, so they're trying to tell you that don't need to worry. You can consider look at this company, like example, like stock that stand to repurchase the most stock this year and next year, like Alphabet, Snap, eBay, Chewy, Uber, Booking, Match, and stuff like that. Now, I don't really agree that you should buy this counter, in my opinion, unless you don't mind taking a speculative or adventurous bet. Because I look through the list, majority of them are not doing that well, at least in terms of my view. And I believe that if the high interest rate comes in, right, they will suffer more. So I will leave it there. But again, you can consider to look at that list. All right. Now, because very clear, the federal GDP, okay, tracker shows that the economy could be at the brink of a recession. Now, last year, I've been calling for a recession. I've been very, very vocal. I said that, look, inflation will come in very heavy. That's why I gave you the $5 chicken rice thingy. And I tell you that, right, crude oil will be going up higher, 121. It really traded it. And I believe that, right, because of the stock market is so high, it's all right, everybody will be trading the market. They will not be going for jobs. So what happened is the stock market will go higher, but not the GDP numbers, not the incomes, not the revenue. And all these are spot on throughout. So the question is, if let's say I'm all correct, then the next one and the big one will be the recession will definitely has to come. So now the thing is Atlanta Federal Reserve GDP tracker is showing that the most of the potential gain is only 0.9% for the second quarter. Now that's very, very low from the estimate of 1.3 before that. So this can get worse if this continue. And that's the reason why I can guarantee you this, there's no way the Federal Reserve has any other way. Because if they can try to do this again, they can try to pump more money in the system and then try to artificially stimulate the economy. But when it does that, it's all right, inflation will go through the roof. And the inflation number will go so high that the people cannot afford it. So what will happen? Because when the money goes to the system, it's all right, the wealthy people, the one that hold the wealth, suck up most of it. So what comes down to the retail level is just drips and it just drops. So it will not help at all. So that's the reason why you can understand the dilemma that this Federal Reserve has. So to me, it's all right. The easiest way is just basically go for the kill and make sure that the stock market pulls back. But the question is this: how come recently the stock market is so strong, right? Like I say again, the stock market goes down doesn't really help a lot of people. So some people refuse for it to go down. Hence, therefore, you can see it's been hovering at a certain level. We'll talk about this shortly. Yeah. Okay. So now this Marco, Kolonovic, right? This guy has been calling for buy for a long time, and almost every time he called for buy, the market goes down. He called for sell, market goes up. Okay, this is really undeniable truth. Okay, all right. Anyway, now he says this: even if the crude oil go to 150 per barrel, he says that the market will go higher. Okay. I mean, the thing is this: he has his reason. His point is this: he feels that the U.S. economy is strong enough to handle $150 per barrel. Okay, so I don't know how he get this number, how he feels so, because now at 120, no, it's below 120, the people are complaining and the retail numbers are going down. I cannot see how would it be 150 that people will be happier. Okay, you must understand this. When crude oil price or energy price go higher, right, the next thing is this: say, Kel, I don't drive, right? It doesn't hurt me. You got it wrong. When the energy price goes higher, it will hit everybody down the road. Because why? That means all the costs are right. The supplier not going to enjoy this. They're going to put the cost back to the consumer. So without a doubt, it's all right. When the price go higher, it's all right. People will have to pay more. So maybe for people like him, he has the money, so it doesn't really bite that too much. But people, the normal retailers, the middle class will get it hit. All right. So undeniable, I believe that is a problem. So of course, different people at different camp, right? So this guy is from where again? This guy is from JP Morgan, right? JP Morgan, yeah. But then again, on the flip side is all right. We have the Jamie Dimon, okay. All right. This Chase chairman CEO says that prepare for an economic hurricane. Hey, wait a minute. Hey, aren't they come from the same company? Okay, it's JP Morgan, okay, obviously. And then this one is JP Morgan Chase. Okay. All right. So I don't know. But this guy is all right, has this interesting thing. He usually has this little knock with his CEO. Not too sure are they doing the the Shuang Huang, meaning that one call for buy, one call for sell and confuse the market. But whatever it is, this is what he says. I'm just sharing with you. And the one that I'm very concerned is Bitcoin. Because Bitcoin, in my opinion, is all right, really cannot come down. Now, really cannot come down means that, right, for the sake of people like in MicroStrategy, people for Tesla, really, for all my crypto friends who love cryptos, right, really cannot come down. Because if really BTC, Bitcoin goes down, right, it goes down to below 27,000, the first target I'm looking at is 21,000. So now every time it comes down to 28,000, it will bounce back to 31,000. Very good, okay? It always bounces there. So the thing is this: I always tell people when things behave in a very systematic pattern manner, right, you must be very careful on this. Let's take a look, everybody. Now you can see that this is the Bitcoin chart, all right? Now Bitcoin chart has never been so sideways for so long, never, okay? Now you can see that it's bouncing between 31,000 to 28,000. So it's like pretty simple, 28,000 just buy, 31 just sell. Right, not bad, right? 3,000 points, right, in between, and that's 10%. So now you can see again it's happening this morning, right? Yesterday already it came down, but very strongly it came down to the low yesterday was 29,000, and it bounces back to 31,000 very fast, okay? So today the selling resumed, and I can tell you this: I am quite sure that the selling will come down again today. Because why? Because I told you, right, I believe the yield is going to go higher. I told you that the yield is going to go back again, in my opinion. And because of that, right, the dollar will likely be going up. Yes, indeed, the dollar will be going up. Now, yesterday we have a pretty nice reversal hammer on this, but now next morning, today, it's up again. So I believe that the market is buying in anticipation of this coming Friday CPI data. So with the dollar going up, the yield going up, right, it's pretty clear that the Bitcoin will get some selling today. All right, today there will be some selling. So my friend Maurice, if you're around, so watch out for this. Now look out for 28,000. Yeah, this is my view here. Okay. Now, of course, I say if it really breaks below 27,000, a very critical level, 27, then the next number I'm looking at is 21. Okay, but of course, I don't think it happens immediately like this. but along the way. All right, so this one thing to watch out for. Now, this consolidation has been the longest of time. So of course, conversely true, if the market really find a reason to buy, this consolidation is worth 3,000 points, right? So which means that if the price goes up, right, it will easily go to 34,000 rather easily. It means that how long it get compressed, if the market turns the other way around, it will just release the same upside, right? So that means very clear. The upside itself is 34,000. The downside itself is 28,000. Yeah. So watch out for these two figures. So 31,000 is a mid-range. Break at 34. Break below 28. Okay. Very, very simple. Yeah. Okay. So watch out for this Bitcoin momentum, and this may change very soon, because I think this consolidation has been the longest for quite a while already. Okay. All right. Okay. So that's done. Okay, so now I've done basically all the local and global news. I say today is a short MAO because more important is Friday's data. So we look at it, Friday's data on Friday's MAO. Yeah. Okay, so now we're gonna go to the alternate market news, and this is what you're waiting for regarding about Nancy Pelosi and whether or not should we actually follow his homework. Okay, so let me just share this with you more. Let me just get something on here. So. Just give me a minute. Yeah? Okay, all right. Now, I want to ask everybody here. Now we have about 82 of you online. Okay, how do you feel now? Are you feeling bullish, or are you feeling bearish, or you are just neutral? Give your answer right now. Bullish, bearish, or neutral? Please key your answer now. I get some water. Okay, let me see. Okay, guys, this is Kel, and I'm asking you guys, reading about 79 of you online right now. So what do you think you are feeling right now? Are you feeling bullish or feeling bearish? So we can see that How Young is feeling bullish, Jerry bearish, Wilson bullish, Karine bearish, sideways, bullish till weekend. Fred is neutral, Steven's bearish, Vincent is sideways, and Amir is bearish. Okay, so that's a different view here itself. Okay, how about the rest of you guys? Can you share with me what's your view right now so that we can feel it together? So Jason is saying that you are actually feeling neutral. Michael says that bearish, but market doesn't react with what I think. Okay, and Susan from us is saying that she's sort of feeling a bit of neutral right now. Okay. Now, of course, if you feel neutral now, right, it's pretty normal, because why? The market has been sideways for quite a while. This one is pretty clear. So let's just look at it in a very objective way to understand how should we react with Nancy Pelosi's portfolio, all right, or husband portfolio. And then after that, we compare it with Apple and S&P 500 and put them all together to have a final verdict, okay? All right, so we have Danny say small bull in the bear market. Okay. Okay, Leslie say neutral. Okay, Michael, okay. Thank you guys for all your comments. Thank you, I really appreciate that. Now this is the best time to basically, learn from one another, and we can feel it better, right? Now, I'm not trying to laugh at anybody here. So if you're feeling bearish and the market really goes down, congratulations to you. If the market, you feel bearish, but the price goes higher, then you must think about it. Maybe something went wrong, or maybe the train of thoughts had to rewire a little bit here and there. Okay? Okay, let's go. Now, this is the reason why you guys are feeling a little bit neutral, okay? Why? The S&P 500 have been bouncing around in this particular rectangle area, 4160, between 4160 and 4080. Okay, I repeat, very important figure, yeah. 4160 and 4080. So basically, right, the S&P been bouncing around this 80 point the last 6 days. So that's why the market is like, hey, what's going on? So that is the problem here itself, everybody. Because what we had earlier, let me just draw for you slowly. Yeah, okay. So first of all, right, we had a very powerful downtrend recently. Can you see that? And of course, when the market broke above it, that was where we also tell you that the market most likely will rebound. And truth be told, the market bounced up all the way. That time itself, that level was approximately 3950. Approximately, yeah, 3950. So very important figure to take note, yeah. Okay. So once it broke the 3950, okay, you can see that the market basically was having a lower volume trading downwards, and then one big volume came in, and that basically probably spiked the price higher. But what is incredible is the last 6 days, right, the volume have been declining. That is something to watch out for, declining volume. Okay, then after that, you must understand the next thing is this. All right, now we have, take this point A, and then I connect with point B. Okay, now we have point C. If you notice this, we are exactly now at point C. Exactly at point C. Okay, so very simply put, 4160 tonight is going to be a very important figure. 4160 on S&P spot market, yeah, 4160 is going to be a very, very important figure. If the market crossed the 4160 figure, the next number it should go will be easily 4200 or 4271. Can you understand this? Okay, 4200 will be the first one. I think that will be easily taken out. 4271 is a bit further away, but that is a figure that it should be able to go if, let's say, the market break the 4160 resistance very, very convincingly. Okay, so take down this figure. Now, on the flip side, if the market doesn't stay above 4160 and goes down, oh, then we have a problem, Houston. 3877. That means that, right, if the market basically couldn't stay above the 4160 level and pulls back and go below 4080, then 3877 will be next. Got the idea now? Yeah, right now for you guys to make it simple for you. Okay, S&P outlook. Okay, now 4160 is the pivotal level. Watch. Breaking above it, and see 4200 and 4271. Losing 4080 can see 3877. First support at 3950. Okay, I give a very detailed explanation here itself. Everybody can take a look. If you can see, right, like my posting now. S&P 500 4160 would be the pivotal level to watch. Okay, break above it to see 4200 and 4271. Okay, now losing the 4080 can see 3877, but the first support you can consider will be at 3950. Now all these are S&P spot level, yeah, not the futures, not the CFD figures. Okay, so you must differentiate. Very important. Okay, so that is a technical point. That's a technical point. How about the rest? What are the things telling us? Okay, let's take a look. Now we must understand this. Sorry, hold on. So, okay, the current situation now shows that, right, a little bit showing that maybe inflation has come down or peaked, but because their data are based on the the March and April data, so obviously it's all right. The data shows that crude oil came down back then. But now, entire May period, the crude oil has been going up. So this chart, in my opinion, is all right, doesn't really reflect it. But of course, when you look at it, right, on another angle, these retail investors have been selling stocks, okay, because they feel the pain of inflation and they want to keep some money at hand. So because of that itself, right, the buying, purchasing is not there. So that's why inflation seemingly is coming down, according to a pretty twisted way of reading this, okay? But of course, the main thing is this. You can see now, right, retailers are dumping their US equity purchases for the last 2 years, okay? They're selling off. They don't want to get involved in the market. So when retailers get out from the stock market, right? So likely to go back to work and they may actually increase the productivity and stuff like that. So this actually tells you that retailers are out. So that means that if retailers are out, right, then who's remaining in the market? It had to be the boys. So if the boys are buying and the retailers are out as well, are you telling me that right now the stock market goes up? Who will jump in to buy? All right, normally it will be the retailer who sold off the last 2-3 weeks. So now the stock market is higher again, they might be tempted to go into the market. And that's why I say be very, very careful. Now, this is the reason why the boys are saying that maybe the inflation has come to a peak, because you can see from this, right, the Tech PC DRM and the DRIWI shipping index, the North America fertilizer index, right, all of them have peaked recently in March and April period. So because of that, it seemingly shows that, right, maybe the Federal Reserve don't need to really, go so much deeper in the interest rates. But I don't buy that, because I say again, all these data are based on the March and April data, which is not really clear or fair. And of course, Federal Reserve will not, because of 1 month data, will change our mind. At least must 2-3 months. So I don't think that this will work. And you can see that now, right? The main thing is this. We all know that in April itself, right, the inflation may have went down from 8.5% on March to now 8.3%. So the thing is, this market is now forecasting about 8.1%. So if anything goes anything higher, all right, then we have a problem. Now, the thing is this, let's say now they really bring it down, okay, for whatever reason, 8%. The market may just chill for one moment, all right? But we all know that the May data is going to be very high. So it's going to be like, if let's say they really play around the numbers and it come out 8%, yes, immediately the stock market will jump up, okay, go higher, okay? But after a while later, right, the market may decide, hey, wait a minute. That one is this April's data, but the May data may be very bad. So what happened? The market may take this opportunity to sell again. You got my point now? So what happened to retailers is that they only read that inflation could be peaking and they jump into the market while the boys unload to them. You understand? This could actually happen on this coming Friday. So all I can say is this, all right, the spot gamma numbers are very clear. The market S&P 500 now, the key resistance is at 4,200. That's why you can see the number shows that 4,002 will be a very critical level to break, okay? Then, of course, the key support is at 4,000, okay? That's where the two highest traded volume are in a way. So the two strikes itself tells you that, right, the market cannot go down because the 4,000 is supporting it very strongly. The market cannot go higher because the 4,002 is resisting it itself. Don't understand why you have this neutral feeling, this feeling. All right. So if you compare to this spot gamma thingy versus the current market now, you can see why those numbers I just mentioned to you is so important. Yeah. So hopefully you remember that. Okay. Hopefully you remember that. What to look out for, what number to be there. Okay. Okay. All right. So the thing is, this morning, the data has just updated this morning. Hold on. This morning, the data has just been updated. Now it's moved towards 4063 to 4100 for support and about 4150 to 4160 now. So the data has a bit, they basically recompile the data. So the two numbers are actually comes even nearer. So from 4200, it moved down to 4160. And from this 4,000, it moved in the latest data. Okay, so what happened now is even tighter. So which means that right now, you understand why yesterday, last night, right, S&P 500 closed at 4160. Yeah, let me show you. You can see the S&P 500 actually closed at 4160 yesterday. Let me just show you. See, very beautiful. Exactly, 4160. Exactly 4160. Can you see that? Yeah, yesterday's closing is 4160 closing. All right. So that means that the market has reached that gamma level. So that's why I said today will be a very important pivotal level. The market can go both ways. Okay. All right. So with that, okay, with that understanding, okay, let's come back to the PowerPoint. Okay, we must see what's happening on the reverse repo operation. Now, the reverse repo operation, I covered it last 2 days ago. All right, now the thing is this: the reverse repo RRP has hit a new high again, new all-time high. Okay. Now the question is, you may want to ask, why is this happening? Why is the RRP going higher? Because basically, in short, people don't want to put into the stock market. Yes, the stock market has recovered a bit, but it's a sideways. It's not like, whoa, flush up, or flush down. So that means a lot of funds are still very concerned with the current situation here. So that's the reason why they rather prefer to put the money with Fed under the RRP to make the so-called little bit of interest while they wait. But because the amount they put in is so huge, right, the so-called interest is still some money. You understand? So they're all waiting for something to happen. So undeniable, there's a question being asked, Kel, if let's say now the stock market choose a direction, what will happen? So if let's say the market choose a direction, let's say they want to go and buy now, right? Then you see this RRP coming down and they'll buy. But the thing is this: if they want to do it, if they really want to do it, they could have done it long time ago. They could have bought some shares recently. Why would they want to wait for the price to go higher than jump in to buy? It doesn't make any logical sense. You understand my point? Because if you tell me that there's a lot of funds outside, okay, fair enough. But the question is this: with the current situation right now in interest rate factors and the inflation data, why would you as a fund manager draw the money out from this RRP to buy stocks at a higher price? Unless you're telling me the earnings will be better. But we all know that most of the companies now are actually revising their so-called guidance. So it doesn't make sense in this point that the money is there during the bounce. It's more of like this. If the stock market really come down by 10 to 20%, example from where we are right now, then this money will be activated. That means you'll see a sudden drop in the RRP. And then when this RRP drops down, right? Yes, that means the funds will go to somewhere else. And that was where volume was surged while stock price come down. And that's where the boys tell you, oh my God, there's a lot of selling in the market. Look at the volume is going up, right? Blah, blah, blah. All this nonsense. And then after that, the retailer will freak out and they'll dump their shares. And that's where these RRP figures might be there to buy the shares at cheap. You got my point? So you see how it works in Wall Street, right? They do something, they plan something, and they'll make it happen, and then you will be like sucked into the whole game without knowing what's happening. But if you actually hear MAO right now, you got an idea what might be happening soon. So you will know that maybe when the price really fall later on, right, it's not the time to really short the market. You know, you want to short it now where the price is still reasonable. You do not want to short it as it come down by 5-10%, and you're like, oh, let's go and short the market. It doesn't make any sense here. You got my point? So if you guys understand what I've just said the last 3 to 4 minutes, right, and you like it itself, right, can you key the word like it? Okay, that means that if you like what I just shared moments ago regarding how the stock market could be working the next few weeks based on what I'm seeing right now, then put word like it, okay? Because I want to let you know that, right, stock market, the difficult part is this, is that if you notice this, every time when the whole is selling, you go and buy, right, you make money. And the whole is buying, right, you go and sell, right, you make money. But the difficult part is that when the whole world is buying and you don't buy and you're selling it, right, you make yourself like a fool because why? People will laugh at you. But those people who are being laughed at usually are the one who makes money. So you see, this is a very incredible phenomenon that people always realize that, right? They actually could make money if they don't follow the crowd. But because by not following the crowd itself, it becomes like you're isolated to one person, right? You feel like, am I wrong? And that's stuff like that. Okay, got the idea? Yeah, fantastic, right? Thank you so much for you guys putting the word like it. I really, really appreciate that. Thank you very much. Okay, please remember this. Liking it is one thing, knowing what to do is another thing. Yeah. Okay. All right. So with that, now we must understand a little bit on Apple first. Now, Apple itself, right? This particular counter, you must pay attention to some detail. Now, Apple basically, right, itself has a 6.5% weightage on the S&P 500 itself. Yeah. Apple itself has a 6.5% weightage on it. Oh, that's incredible. So in short, if Apple shares basically move down by 10%, then the S&P 500 itself, right, logically will move down by at least 4%. You got an idea now? Roughly the ratio there. So that is a problem because when Apple shares come down, it will bring everybody down at the same time. So that's where again the S&P will move together at the same time. So all this is where it is. So this is where I want to tell you about Apple now. Let's look at Apple first. Okay. Now, recently, Apple share came down, right? We all know that Apple has been the darling of this Warren Buffett, but we also know that, right, he took some profit around here. Remember that? Yeah, he took some profit here. So now Apple shares have came down, and Warren Buffett did buy some along the way down, okay? But recently, you can see that the volume has been coming down, but the share price rebounded, okay? So normally, this is what happened in a bear market condition, yeah, whereby volume goes down, but prices goes up, okay? Now, 150 is a very, very important resistant, support and resistant. The last time when it hit 150 back in March this year, it bounces off. Can you see that? Then after that, when it broke below it, that was where the market gave no chance. It fell down all the way to about 134. Now the market rebounded recently. If you notice this, the market tried to go past 150, but almost immediately the next day just come off. Okay, so 150 is going to be a very critical pivotal point. If the market low was 134 here itself, right? Now you should know me by now. If this 134 is here, the difference is about $16, right? So very simple already. If the market can break 150, the next target itself will be easily 166. That means that if the market can go past 150, 166 should be the level that the market could be going all the way to here. Okay, that's my view on this Apple. But if the Apple shares cannot go past 150 and pull back down again, then it's the same thing again. It will likely come back to 134 level. Yeah, 134 level. Now, of course, if things get drastic, it may go worse than 134. It may go down to about probably 118 level. So, of course, if Apple share go to 118, I think a lot of people will scream, yeah, because I'm sure three things will happen. Number one, people who long Apple will be complaining they'll cut their losses. People who are like, very feverish into Apple itself, right? They may buy a bit more. People like Warren Buffett will definitely buy more. And I think so. The same thing is if Apple share go down to 118, you should be buying more. Okay, got my point now? So I repeat, if Apple shares ever come down to 118, let's buy some Apple. Okay, Ken, I'll put it there for you. Now, Apple shares are at 148 level. Okay, if it ever goes down to 118, let's buy some Apple. Okay. Now, of course, 118 may not be the lowest point at a point. It may not be. It could be even lower. But at least we have a figure right now in our mind. So to me, is that all these things are called planning and strategizing it. So you will know what to do when things happen, rather than you like the price come down. Say, oh, what should I do now? Should I cut loss? Should I do this? Should I buy that? You all this right now. Okay, write it down and then prepare yourself. Okay, got the idea? Okay, good. So the question is this: why Apple? Right? Because of Nancy Pelosi, aka husband. Now this is where as a Democrat, as a House, she has to really show what she has. Okay, this is a disclosure, and no shame about that because they do that very, very normal. And she has been really making lots of money. So want to look at it itself, right? Is that recently Nancy Pelosi / Paul is the one that activated the trade apparently, right? Look at it, my God. On the 13th of May, he bought some Apple, okay? And 24th of May, he bought more Apple, and he also bought Microsoft. Now, Microsoft, recently the share came down, right? So he bought more Microsoft and Apple. Now, the amount they brought in is approximately $1 million worth, because you can see the value there at 500K to 1 million, 250K to 500 million, 50K to 100,000, and so forth. So he bought about $1 million worth. Now, that's a lot of money. So what I did for you, I know that you want to ask, Kel, did the price goes up, right? So remember this 13th of May and 24th of May, take a look. So what happened is this, I confirm and double check on the data as is provided here itself. Just a minute, yeah. Okay, so this is a periodic transaction report, and this is definitely a filing at 20. This is a real filing, yeah. Okay, so this is where Nancy Pelosi filed in about how much shares she buys and Apple and stuff like that. So you can see that right now all the filing is there, the figures are all there. Pretty clear. This is confirmed done deal trade by Nancy Pelosi, aka husband. Okay. All right. So you can see that it's all mostly call options, and the strike is all very, very far away. Yeah. And the target is for next year, 2023. So take note of that. It's a 2023 strike. Yeah. So it's quite far away in terms of time. So of course, if you believe that in the next year it's starting to be better, then of course, and I told you this, in fact, if let's say the stock market really pulls down, right, definitely for sure, by the mid-year of this year, right, it's a very good time to buy a lot of options and let's keep it for next year. I tell you that that's something that I will do for myself. So take note of that. Okay, so now date is 13th of May and 24th of May, right? Okay, let me show you now. Now on the 13th of May, okay, let me just move my charts a little bit higher for you to take a look. Here we go. Okay, so on 13th of May, Paul first entry, that is where averagely about 143 level. Okay, that's where Paul went in to buy. Okay, you can see that very clear. So this is where majority of the price is, and of course the share price came down. So when the share price came down, like all good trader, what would they do? Yeah, what happened? He buy more. Okay, he buy more. So you buy more on 24th of May right here itself, and of course after that, woohoo, boom down. Okay, so okay, best trader, right? Definitely, yeah. So he basically went in 2 times, and $1 million worth of shares and options are purchased in a way. So my point is this shows that, right, he's confident, and of course now the current price is higher, a little bit in the money lah, a little bit, yeah, a little bit. Okay, so good idea. So what do you think? Should we follow him? Because he has been pretty accurate. In fact, no much losses at all. So the only thing is this: the last few years, we must understand that it was because Federal Reserve was pumping a lot of money into the system. This is the time whereby now uncle, this granddaddy is not around. So whether or not, right, this time when they buy, right, do they really know what's going on? Or probably they're just buying to help the economy or give some confidence? We don't know. But anyway, you can see from the screen right now that these are the 2 levels to watch out for. Yeah, the 2 levels to watch out for, and the average price is about 140 range. Okay, 140 range. So if you want to buy some Apple, you consider that 140 range. Okay, can okay. Now one thing is that, right, just to wrap it up before we go to the chart itself, right. Now, there are some counters are still being heavily short by the market, and this is one of them, is AMC. Now, AMC and GameStop, right, these two, they are now having a lot of shorts on it. So would there be a chance of a short squeeze? I don't know, right? We have seen it before in this Reddit bets. So now recently, this thing has toned down a little bit, but still non-deniable, right? A lot of hedge funds now are shorting these kind of companies. And of course, the question is this: could there be a chance of it? Now, this morning, I was just looking through Singapore forums, and I see that, right, a lot of this stockists or my friends, they make money on the penny counter once again. All right, one of these, I think, is Oceanus. So when I can tell you this: whenever the stock market goes sideways and penny counters get into the limelight, right, usually we all know that the next thing will happen is the big movement coming in. So the big movement could be the blue chips buying, and the price will shoot up to the roof. Or that means that we are near to the end of this buying period. Selling is just around the corner already. Normally, we see this in the market. We all know that with experience, right? This is just around the corner. So again, I will let you to decide, but I will not comment on that. So whether or not do we follow Nancy Pelosi's homework, or should we actually go against it, right? It's all up to you to make your own final decision. Yeah. Okay. So with that, I come to this part. My last part itself is what should we do with the charts today? The bull goes bull. The bull goes moo, the bear goes drr, and the flamingo is different this time. Okay, let's take a look right now with the charts here. Okay, just give a minute. Oh God, I just powered off the thing again. Okay, hold on. While we are waiting for my this platform to come out, right, I'd like to share some stuff with you. Now, as a trader, I always tell people this: it's nothing too difficult to trade as long as you must understand this game itself is a really zero-sum game. Someone must win, someone has to lose. So if you want to be in the winning side itself, right, you have to go to the side that no one wants to go, usually the case. And that is where the money really is. Okay, I know by saying this is not going to be contradictory, but this is real. As a trader for so many years itself, right, you really need to be aware if everybody is on one side, everyone is on one side, it's always good to walk to the other side. Now, if let's say now only some people on this side, some on the other side, then you're in the neutral zone, you just have to stay in the middle. Then maybe about 70% on the left side, 30% on the right side. Nope, you still stay in the middle. Only when you see 95% on the left side or 100% on the left side, then you walk to the right side. You understand my point? That is where the fun really begins. Okay? So hope you understand what I just said. If you understand what I just said about this, the last 1 minute or so about this left side and right side. All right, let me just key the word understood. Okay, if you understand what I just say, then just key the word understood. Just for the preview of this. Okay. Now, while you're keying this is all right, let's look at the market right now. Now, China. Now, China stock market today, wow, look at it, beautiful, right? Now, I told you once the market breaks above this blue line and above the moving average, it's a time to buy. And that's the reason why you can see Hong Kong shares, China shares all going up. You see that? It's that simple. Therefore, recently, it tried to come down to the moving average, but it didn't touch and rebound. That's a very strong rebound. It's a very strong BMB. So naturally, we expect the price to go higher after they break the BMB RL, and indeed it's happening. Okay, now I need to change all my levels, yeah, because the market has moved, so it will move away. So now this MLP is redundant, no more using it anymore. Okay, they're going to clear all this off. Okay, now I'm going to redraw this. Okay, let me just change away the Fibo first, yeah. Now you must understand the FIBO. Yeah, this is the point A back in 2020, and this is point B at the highest point. Now the FIBO shows very clearly that it went below to 61 for the longest of time already. So you can see that it's still very damaging. But because it's so long already, right? This FIBO is no longer usable. Take it out. Okay. So now I'm taking a lot of things away to just show it to you, right? How would I look at this from a technical point of view? Okay. So first of all, we can see very clearly we have a very strong resistant trend line here itself. Let's draw it in. Can you see that right now? Okay. Now, of course, this is not going to be the best trend line because you can see the connection area is not that many. Okay. So I'm going to leave it there. Okay. Oh, sorry. Need to get the connection done properly to get a best deal of this. Okay. So you can see that the movement down is actually in line with the moving average 200. So now what we have is that the market already crossed the MA30, right? So that is bullishness. But there's a problem, everybody. Watch this, huh? Okay. Now look at this RSI below 30. Now this is where the common points are. Can you see at the bottom of the screen? Then this is point X and point Y. Now it's very clear that Y is lower than X, and usually this means that the market is still kind of bearish. The one that will confirm this is the RSI at the higher level, whereby it's coming up soon. Okay, now this is where the small a and small b is. Okay, so simply put, the small a level is here, right? Can you see that? Okay, at A1. Then this is where you're going to hit the B1 very soon. Okay, so now we can see very clearly A1, like A, is going to be higher than B1, right? So that means that if the market hits the same common point RSI at A, then that means that the resistance will be around the corner already. And that means that the market could be coming down soon. Okay, got an idea? It could be coming down soon. So with this understanding here, we open up the chart a little bit, okay, to get it clearer. Okay, so now we have the major trend lines coming down. Let's put some form of support and resistance. Now the support is definitely be here because that is where you can see the market touches hits the blue line and then rebounded from there. So where is the resistance then? The resistance is always the opposite way. It's something around here. So you can see now. Can you see that? Change the color a bit for you guys so they can differentiate better. Okay, here we go. So we can see there, right? We had a resistance back then here, and then another before they come down. So undeniable, there should be some resistance pretty soon. Okay. Now, not too sure today's it went up and then pulled back. It's really resisted. We can't be sure, but we definitely know that now to chase after stocks right now today, it doesn't make any sense. Okay. So if you want to chase stock today, right? I mean, seriously, unless you are buying near the OP of today, if not, it's all right. Just give it a miss. Okay. Just give it a miss. Okay. Now, if you want to buy, maybe when the price come back down. If the price come back down to somewhere around here, then you can try at 13,490, right? You can try. The resistance is 14,058. Okay, got it? All right, so these are the two levels to watch out for China A50. Okay, all right. Now today I'm covering more because recently, again, friends asking me, Kel, can we buy some China shares right now, right? I tell you back then, this was a buy when I gave you the signal. Now you don't buy here and sell, right? It doesn't make sense to me, okay? I gave you a signal 5-6 days ago, right? Regarding about the China shares itself, you can buy it when it cross here, but not now, okay? Now is not a very good time to buy, okay? All right. Okay, let's look at the US stock market with the TWB system. Okay, now the US stock market today, by right, is a buy on open. That means that, right? Now you can see that this is what I call a CCRY, color change red to yellow on the Dow chart. So today's OP itself, right? Today's OP, today's OP is 33,115. Okay, on the CFD side. So by right, if the market stays above 33,115, today is a buy for the Dow Jones based on our technique. But if the market cannot go up and pull back, right, that means the sellers have other thing in mind. Now the KSI is also green. Sorry, the KSI is also green in color, and it's uptick. So that means that the buying is still going to be relentless. So the question you may ask: so should we be buying? I repeat, above OP, stick to the buy side. Simple as that. Okay, remember that. But if it pulls below OP, right, then stop buying and just wait for a while. And if you want to buy it cheap, you can buy a KTR -1, -2, or -3. You can try. Okay. Now, what is crucial now is this. You notice this. The MLP for today is 33,020. The pivot one is 33,024. Now, which means that both MLP and pivot one, they are about the same. We call it a stack. So when there's a stack itself, right, the market usually will pull towards it if the market is going towards that direction. So without a doubt, right, I suspect two things will happen later. One, the market will be pulled back all the way down to 33,020. And then after that, it may rebound from there. That will mean that the market accepted the pivot but rebounded off the pivot. So traders must watch out for that, 33,020. Now, if the market gets some very bad news or some negative things, or the market intention is to sell overall, then of course, once the market breaks 33,020, the market can go down lower. And this time around, the lower figure can really go down to this point here itself, and that is 32,598. Okay, this is actually is possible, yeah. So traders, kindly think of this figure, 33,020. It's a very, very important level for today, for the for the Dow Jones, yeah? Okay, very, very important. Okay, Dow Jones done, next up, NASDAQ. Now, NASDAQ, right, we can see a very interesting phenomenon. Now, this is the BMB, right? As we know, it's a BMB on the day chart, yeah? It's a BMB. And of course, the one on top is the RL, resistance level. And of course, the bottom one is called the SL, we call it support level. Now, yesterday, the NASDAQ came down beautifully, touched the SL and rebound. That's the reason why stock rebounded yesterday, okay? The thing is this, today, the crucial part is this number, 12,641. This is actually the MLP. If the market touch MLP and rebound, it's a buy. Yes, if you touch MLP, 12,641, it will be a buy, okay? But if it basically close, trades below 12,641, then the selling will kick back in again. And the selling will bring it back down, and this time around should be come to this point, 12,430, and that's MA30. Okay, one thing I don't like is that, right, the KSI is actually still green, but it's a bit lowering, but still overall it's a green uptick for today. So even if you sell, right, you must take profit at each gantry, yeah, very important. Now I'm going to jump the gun a little bit to something extra here, so just give me a moment. Now this is my Dow Jones with my version 5.8. I think that I updated this on Monday for you guys, and I got people asking me, Cal, how's the KRW versus the KSI? And I want to update you guys is that, well, it's still okay. The KSI is still green, but my KRW remain red. So which means that the selling market, the selling presence is still available in the market. Okay, so the Dow Jones haven't have anything here. We're going to skip it first. But the NASDAQ is the one that I'm a bit concerned today. So let's look at the NASDAQ now. Can you see this? Right, the NASDAQ itself, right, we have a problem, yeah? If today the NASDAQ doesn't really goes up, the KSI will kick in. But the flip part of this itself is that my KRW is blue. So again, this creates what they call the sideways effect. It neutralizes the selling and the buying. Only when the KSI is red and the KRW is red, two of them are red, then the selling will really, really kick in. At the moment now, it's neither here or there. That's why you have this pretty sideways view. Now, do take note, my KFC for my NASDAQ is getting nearer, yeah? It's on the 17th of June, yeah? Just let you know, 17th of June. Okay? All right, take note of that. Okay, for student of mine, PTP level will understand this. If you're not PTP, you can go for PTP and then you learn more about this. Okay. Now, of course, we're going to jump the gun to S&P then. S&P is still okay. KSI green, blue bars, all are good. So no need to worry on that. Okay. Now you got an idea now? Okay, jump back to what we just ended just now. Okay, so we have the NASDAQ. Then we have the S&P 500. Now, S&P 500, all is good. KSI is green, all is good, but we have a problem. Okay. Today, the pivot one is at 41.48. And this morning, we have already got some resistance on it. Now, this morning, the high was 41.58. And then now it's back to 41.43. So it's now trading below the P1. And now the MLP is very, very nearby. It's 41.36. Okay. So what happened is this. If the market hit 41.36 and rebound, it's a buy. Okay. Very clear. But if the market loses 41.36, then 40.71 will be the next figure. But KSI is still green and it's still uptick, right? So the downside is kind of like going to be harder. So if you ever come down, do take some profit along the way. Okay, this is very, very important information. You must make sure you remember. Yeah. Okay, Hang Seng. Now, Hang Seng is a runaway because of the Shanghai, the China A50. It's a runaway. And of course, the KSI has been very clear. The boys have been buying from day one itself, pretty clear. It went to BMB 1x1. It did pull back a little bit, halfway mark. It found strength and push it up again. Okay. So now what do I see here? Everybody take a look. Yeah, the point that need to be crucial, important for today is that now the pivot one is at 21,917, and we have a little bit of resistance right now, a little bit. So if the market do pull back later on, the MLP will be very critical for 21,604. As long as the market doesn't go below 604, we're still pretty safe on the upside. But if the market comes down to this figure, then selling will really come in. Yeah, so 21,604 MLP, 21,917 the pivot one level. Now it's being resisting it itself. Yeah. Okay. All right, Nikkei. Now Nikkei has been really a wow. Look at it. For days and days and days, the Nikkei has only a one way. It's up and up, up and up, up and up. Now, what's the reason? Because the yen itself right is now at 135 level. That's the reason. Let me bring the yen first. Let me talk about yen first. Okay, look at the dollar yen. The dollar yen. $133, sorry. Now the dollar yen is just 133. Look at it from 126 to 133 right now. So a lower yen, okay, a weakened yen will be good for the economy because they don't want a strong yen. So the thing is that with the dollar yen shooting up from 126 to 133, up by 600 full points. So obviously it's all right. That will push the Nikkei higher. All right. So if the dollar do continue to go higher, the dollar continue to go higher, then naturally the yen will also go higher, right? Okay, the dollar yen will go higher. So without a doubt itself, right, this will actually push the Nikkei a bit higher. But watch it, okay, what if the thing get too much? What if the dollar yen go to 135, which I suspect that it will go to 135 to 136 range in the highest level? Then what will happen? That means that the yen could get too cheap that it may hurt back them again. So this is like Singapore dollar, right? If the Singapore dollar depreciate in value, is good for us for import-export. But the bad is that, right, the people in the country will suffer. So it's a bit of like both side dilemma. Okay. So what I'm trying to say is, if let's say the dollar yen goes up, but as the Nikkei stop moving higher, that means the Nikkei don't move any much higher, right? Then you must be very careful. That means that the market may think that this is a bit too much, yeah? So for me itself, right, pretty clear. Today is pretty clear. As long as the market stays above the BMB RL, we should go higher. So 28,237 should be the figure to target. Now, the thing is this, the KSI all the way has been green, right? So even when it pull back over here itself, the market just stay on to the buy side. So again, this tell you, right, a lot of indicator in the world, when the price pull back, right, the indicator will point downwards. But our indicator don't point downwards. The indicator actually tell you that you can buy more. And of course, if you have done that, you make more money today. Okay, so pretty straightforward indicator, very forward indicator. Yep. Okay, so that's Nikkei. Now DAX. Now DAX is sorry, hold on. Okay, DAX is where it gets interesting. Now DAX actually, right, has a BMB stretch all the way to May. All right, now it didn't go low enough to create a BMB -1x1, and recently it went past the RL, and of course this is where it got supported very strongly, and now it's going up, right? Now, but you haven't hit this point yet. 14,844 is a level. Now I kind of suspect that the market may really want to test one of them before we can see the bigger movement. So let's say the DAX come in today and really go to 14,844 and reach here itself, this will be a very good price to short the market. Now, you don't see me telling you this, but if the market really go to 14,844, it will be a very good price to short the DAX. Okay, a very, very good price. Okay, all right. So watch out for DAX later on today. Crude oil. Now, I'm very bullish on crude oil, and I'm still going to stick to my gun. I believe that now crude oil is now basically bouncing at the BMB level, as you can see. The BMB level here itself is at 11863. Okay, I'm going to write it down for you. Change the color. 11863. Okay, so if the market really breaks, and this is a CFD price, yeah. If the market really break 11863, right, I can guarantee you this. I'm very confident we should see 124.3 in the near term. Okay, now I repeat myself one more time. If ever crude oil blasts past 11863, it will be trending towards 124.30 level. Now, this is going to be a pretty almost $5 or $6 move. That's a lot of money, yeah. So what happened when the crude oil price go higher? Definitely inflation will be on the tap, and everybody will talk about inflation, and that will hit the stock market. Okay. Now, of course, Chevron, Phillips, OXY, and maybe BP Mobile and Shell, all this will benefit when the gold price, I mean the black gold goes higher. Yeah, definitely will benefit. Okay, so will that push the stock market higher? Yes, it will push the stock market higher, but it will hurt the retail, you hurt the consumers and stuff like that. Okay, so I'm confident. I'm pretty confident with this, and of course, since I'm confident, I'm bringing my KRW in again to show you something here as well on the crude oil. You can see that, right? The crude oil has a bit of interesting factor here. You can see now, right? The KSI is green, but the KRW is red. Hey, wait a minute. How come like that, right? As I say, right? My KRW, how it works and how it functions itself is not the usual way. It's a very complicated, calculation. So now, obviously, everybody think about this, okay? If the KSI stays green and the KRW is red right now, what happens if the KRW turns to blue? What if the KRW turns to blue? What will happen? Can everybody answer me now? What if the KRW turns to blue while the KSI stays green? What will happen to the crude oil price? For those who are PTP trained, you can answer me for me. For those who are not PTP trained, you can give a guess yourself before we move on. Yeah. Okay. I want to see how many of you can see this. Okay. So while you're going to key in and figure in, I want to tell you that what happened previously. Okay. Can you take a look here? Now, this is where it happens. If you can look at it, right? Okay. When the KSI was red in color, there was some blue bars around this area. That's why the market shouldn't really go down much. But once you can see that the blue and green comes together, which means that you see the KRW blue and the KSI green, that was where the market was consolidating around here, right? And Biden and friends was trying to bring the market down. And once it go past there, my God, from 109, it shoot up to 118. So there was a $9 run just like pum, went up already over the last few days. So you got an idea now? Okay. So definitely, right, if the whole thing do actually repeat, right, we may have something similar. So you understand why a lot of people don't like us, because we are able to tell you things beforehand, okay? A lot of people say that, we are a little bit, our way of reading the market is too observed. It's like too new age, and very hard to accept this. But to me, it's all right. We have been showing that this is why we need to be always ahead of the game plan. So when the boys are actually planning something, right, we know what they're planning. So you can look back in the history of it as well, right? Can you take a look right now? Can you see this marvelous recovery, the run that we had? When I was predicting the crude oil will go to 121, right? Look at it. It was no brainer at all. Look at it. Look at it. The KSI was green. The blue bars were also green. Can you see? Blue bar was blue and green area. Can you see right now? Can you see it right now? So you can understand why, right? When the crude oil was actually trading around this area, many people call for sell and think that the crude oil will come down, because from $70, it goes to $90, right? It's up by $20. It's up by almost like 15%. No, 18%. And people say, okay, it's too high already, it must come down. But I stay on and I tell you this, no, crude oil will still go up higher. Now, of course, some people say that it was because of the Russian thingy and stuff like that. Okay, we put that aside. If you really think that the crude oil went up recently was because of the Russia thingy itself, right? Then I want to ask you this question. Okay, now we are Ukraine, and this Russia thingy has been ongoing for the last 100 days already. So it becomes like a day-to-day radio border already right now. Watch this, everybody. Can you see right now? What we are having here is a bit of problem, guys, because if you look at the chart, it shows that, right, it got nothing to do with the recent recovery now got nothing to do with Ukraine and Russia and whatever. So it's just a matter of time. Now, of course, you may say, okay, what if the KSI turn red? Okay, if the KSI turn red and the KRW is red, then the selling will come in. Okay, I'm going to be upfront here as well. Cannot be like, I bluff my way in. Okay. Okay, so I'm just sharing with you, but pretty confident that what should happen. Yeah. Okay. All right. So that's crude oil for you. Wow, it's trading higher now. That was like 117 right now. It's 118 already. Okay, live sharing. Okay, so that is crude oil. Okay, got an idea? Let's look at gold. Okay, gold. Yeah. Now, some people ask me, Kel, why are you bearish with gold? Of course, if the dollar is going to go up itself, how can the gold be going higher, right? So today, again, we have a usual thingy whereby it's a CCRY on the gold chart. But the thing is the market just couldn't stay up above OP, right? Can you see that? Yeah, it couldn't stay up. So now what we have is that the KSI is green in color. Okay, there's no blue bars. So actually it's very bullish. Yes, by right, the indicator tells me it's very, very bullish. But the price action doesn't really show that. Now, what should we believe? Indicator or price action? Of course, price action. So what comes to my mind is this. Now, because of KSI is green and there's no blue bars, so I should be a buyer, right? But I can see on the chart now, I can't be a buyer because the market is basically coming down. So that means there's some external force that's bringing the market down. So 1847 is a very critical pivot level, which the market has broke down below it already. So which means that the next number will be 1846, which is the MLP level, 1846. Now today's the pivot 1 and pivot 2 is very tight, very, very tight, because the market is so tight recently, okay? So 1832 will be next. So I'm going to say this up front. If the 1847 can't hold, today we may actually see 1832. 1832 could be traded today on gold, if let's say I get it correct. But of course, if the market stays back above 1847, if it stays above it strongly, yes, the market will go up again, because the indicator informs us if the buying comes in, then the indicator will come together and show it up higher. All right, so this is how it works. Indicator tell you one thing, the price action tell you another thing. You need to follow price action, and then just be mindful that about the indicator so that you know what to do during the intraday. But if let's say that the indicator and the market go together at the same time, then you just go for the kill. You got my point? If you're kind of lost here yourself, join TWB. I'll tell you more in detail, and you will definitely make some money. Yeah. Okay. Now, so of course you will straight tell, can I see the KRW for gold? I'm pretty sure you're asking that yourself. So let's see the KRW on gold. Everybody take a look. Yeah. Now the KRW on gold actually shows us that the green and blue is actually good. There's green KSI and blue bars. So it should be positive. But the market doesn't show it. That means there's some external force that's pressing the market down relentlessly. So that is where I get very fearful, because when indicators is mathematics and statistics, right? And when it doesn't show you that and the things happening, right? Then you must be very careful. I give you a best example is this. If statistically show that today shouldn't rain, but the cloud is all gathering around you and it's thunderstorm is coming, the lightning and thunder is going through. Should you stay under the outdoor now just because the statistic tells you that it should be not raining today? Sometime in life, right, you just have to take note of that. Okay, when the environment is showing you something different, right, stick to the environment because that's the real thing. All right, got my point? Okay, so I'm actually watching this very, very closely here, everybody, very, very closely. All right, so with that goal, we look at silver, definitely. Silver is also trying its best to tingle around the same area, but silver also has what they call sideways momentum. So if silver comes down, right, $21.13 should be next. Now today, the KSI is still green, no blue bars, so should be okay, right? But again, something shows us that the silver price is not doing the thing that what you're looking at. And of course, we put the KRW, you can see that now we have a bit of problem here itself. The KSI is still green, blue bar is still there, but they're both retracing a little bit. Yeah, retracing a little bit. All right. Okay, got an idea? Pretty good, right? So last, we look at Ethereum and Bitcoin. Now, Bitcoin, Ethereum, we talk about this. Now, talk about Bitcoin first, easier. Now, Bitcoin is coming down, definitely. I told you that's not, I am shorting the Bitcoin and I'm still in short position. Now, Bitcoin now has broke below the 30,990 figure. I told you, right, if the market loses the pivot 1 number, it will come down. And it's coming down. Now it's supported now at the MA30 because the KSI is green and no blue bar. So that's why it's supporting it. But if the market continues to sell down, that means the seller is much stronger than we think of. And the next target will be 28,584. So if let's say the Bitcoin is coming down, definitely the NASDAQ will be affected because a lot of counters are involved in Bitcoin. So when that comes in, the repercussion will come in. Now, I missed out one counter. I'll share this with you. Is this counter called Tesla? Now, recently, right, Apple and Microsoft, they're trying to hold the fort, but Tesla is losing its strength. So you look at Tesla now, everybody, we have a problem. Everybody take a look. Now, if you're following me, it's all right. You will notice that you can see all my trend lines are all automated, fully automated. Now, we don't need to draw a single thing here itself. Now, what is very clear is Tesla has a BMB recently, and the BMB shows us that, we have a problem, Houston, that Tesla has, is down for 3 days already, And Tesla, the BMB target is actually this figure right now somewhere, $658. Oh dear. That means that, right, if Tesla is to come down, right, Tesla may have to come down another $60 from where we are. So of course, if Bitcoin comes down later, it will push down Tesla even lower. So I believe Tesla may hit 660 to be precise, the number I gave before, right? I think you'll go down to 660 soon this week, okay? If let's say things really go according to plan. Now, of course, the KSI is green in color right now, but the KRW already turns red. And you can see that, right? You can see over here, when the KSI and KRW are red, right, the selling is there one, okay? So with all this thing right now, right, I kind of, we're waiting, yeah? If the KSI today or tomorrow turns red, right, then I believe Tesla will see further selling, okay? So once again, you can see that, right, with this, all this thing get very easy now. We will know what to do. And as a trader, you just have to take note of all these figures, yeah? Okay. So jumping the gun a little bit because it has to do with this Bitcoin. So going back to Bitcoin, you can see now it's actually trying to find some support at 30,115 level. And of course, if you go back to Bitcoin and put it back in, let me just bring it in for you. Bitcoin. Okay, you notice that my KRW itself is not there because KRW wasn't implemented recently on this Bitcoin. So you can see that it's not there. See? Okay, so I can tell you about Bitcoin, but maybe hopefully we can get it up sooner or later. So no KRW for Bitcoin and Ethereum. Yeah, just so you know first. Okay, so we have Bitcoin coming down, Ethereum, let's take a look. Ethereum is also coming down to this DJDD setup. So that means that if the market stay below OP, today's a sell, and as a BMB, so that means that Ethereum may come down to 1615. Now low, if you're listening to me right now, you may be asking me, can buy Ethereum, right? No, don't buy Ethereum until you see 1615. But at the moment now, not so good because the KSI is red and blue bar is extending. So give the miss, wait for a while. 1615 maybe touch and rebound. It may also crash it lower, right? So don't touch this first at the moment. If you really want to buy 1615. Okay. All right, that will be all for today. You can see today is a pretty detailed one. Okay, not too short MAO, but still a lot of details given to you. I hope you can make some money from this, and I wish you all the best. And this is Kel signing off. Bye-bye.